Hello.
Yeah. Yes.
Hello. Yeah. Thank you very much. Um, just those are good questions. But before I go into that, could I just again standing on existing protocol, if that's fine, just to make a brief comment on the NDU, and I never lose the opportunity of doing so. I think it's a very useful document, and I really do want to commend the World Bank for taking the time and the effort to put this out every 6 months. I find it very, very useful. However, I do feel that Nigerians perhaps don't read enough. They don't take advantage of, and policymakers by extension, of such useful analysis which is readily available. Why do I say so? Apart from many of the things we hear at times, I remember at one point in time we looked at the website and we were appalled by the fact that barely 1,000 or 2,000 people had downloaded that particular document. Very useful, very concise, and I would encourage as many as possible to look at that document. Some areas we're not necessarily on the same page, to be honest, but still a useful framework to start to understand the complexities of the situation. So well done to the World Bank. Now, in terms of, yes, please. Now, in terms of the contributions, which you, and your question is almost like about 5-pronged. But in terms of contributions that the central bank has made, I would say that clearly for any economy, you do need stability for you to be able to grow. And we recognize our role as custodians of stability. And we recognize what we have to do to ensure that we accomplish and attain stability, and we continue not just in attaining, but we continue to protect. So with that comes the need for us to be proactive, to be able to understand risks, and to be able to move before the risks overwhelm us. So that in a nutshell, I think, is putting into context how we see our role and the things we have done so far. And that is why you find that the volatility in FX rates has considerably moderated. It was about 4% about a year ago, and now it's down to less than 0.5% about. And those are all things that we will continue to ensure that we guard on jealously. Price stability, financial stability, those are very, very key areas that we ensure that we are monitoring and ensure that we get ahead of. Of course, you're absolutely right, Nancy, in your observation that inflation is still a bit sticky. Or, well, maybe less sticky now than it was before, but it's still elevated. And of course, we believe that if we continue the course of orthodox monetary policy, which you speak about, and which has brought about results, if we are able to continue the course, which we will, then over time, the inflation should moderate. And of course, with that would go moderation in interest rates as well. So those are things that, will naturally take its course. And if you look at where we were relative to where we are now, I think those things speak for themselves. Then in terms of next steps, I think there's a need for us to, and you probably hear this statement a lot, but believe me, it's something that we need to take very seriously. and that is the need to stay the course. And from what I have seen many times, the need to stay the course in others who have been through this kind of challenge is not as easy as it sounds. It's not as easy as it sounds for so many reasons, not least of which you've mentioned some of them as well. So hopefully, as the impact of the reforms in terms of stability continue in that path, what you will see in terms of the opportunity for growth will begin to heighten, and then that will obviously trickle down to those who are the more vulnerable within our society. And of course, as you know, some of the things that the fiscal is looking at is how to make adequate transfers to the less vulnerable, to the more vulnerable, I beg your pardon. And that is something that is being strengthened. The mechanism for that is being strengthened on a regular basis. I think that in terms of the next steps also, something very important I think we need to do. We need to get the message out a lot more. And that's obviously a reflection of some of the things we have done recently. And you were with us both in Washington, and we did some things in New York as well at NASDAQ, to explain our situation, to let people know that, things have moved a lot from the time many investors had lost hope and had exited. And we saw that their disposition towards the trajectory of Nigeria has been getting better and better. The numbers speak for themselves, really and truly. Like you said, we put out the net reserves figure and shown that within a year, the net reserves moved from $3 billion plus US dollars to 23. So that's a quantum leap. We've also seen the issue of you're right, with respect to our annual accounts, absolutely right. I mean, over ₦1 trillion in losses in 2023, down to a positive of 30-odd billion naira. And of course, the transparency that goes with that. Because you see, for investors, nobody is looking to come and risk and lose his money. Okay, and I think much of what we've been able to accomplish so far has come with that consistency and transparency, which gives confidence to those who are going to invest that nothing is hidden. The differentials between the rates literally vanished and down to a bare minimum. So it's easier for people who perhaps were on the sidelines in the past to now come in and do their business. And when I talk about explaining and communication, there's something that is very important, because this is something that tends to come up, has been coming up more recently with respect to the dependence of Nigeria on oil reserves, and I beg your pardon, on oil. And really to say that trajectory, if you look at the numbers, especially with respect to our current account surpluses, you see that whole trajectory has begun to change considerably. Even the sort of things I have been talking about of recent with respect to inflows from the diaspora, international remittances, that has gone up quantumly. Importation of oil, we all know that has gone down. And really and truly, we can continue to, if we take a hard dive at a lot of these numbers, you'll find out that the diversification is gradually beginning to seep in, and less dependence on oil as we were several years ago, which in itself helps to moderate volatility. And if you look at what happened recently, when the issue of tariffs came up and the concern about oil prices going down and the impact on countries like Nigeria, you'll see that, relatively speaking, we had a moderate effect. Okay, that's not just as a result of what I've just said, but also the fact that the central bank itself had created a lot of resilience and had created buffers, and there was more confidence in a more transparent and open market. Without a doubt, in fact, dare I say that that is the only type of monetary policy, orthodox monetary policy. Dare I say so. And of course, as you can see, it is bringing out, we are seeing the results of it. And as I said earlier, quite frankly, I think the bottom line of all this is timing. We believe that if we continue on that path, after a period of time, as prices begin to moderate, which they have started to, okay, albeit maybe not at the pace that many would have liked, but as that continues to go, then the rest follows. Interest rates begin to come down, and it becomes a lot more palatable for everybody, especially the less privileged. However, that is not the only mechanism. By no stretch of imagination is that the only mechanism. We need to ensure that we have a strong, robust financial system that is fit for purpose. And that is the reason why, as you may know, the recapitalization exercise, which is very much progressing at a satisfactory pace. That is also something that we are very much honed into. Of course, we recognize the fact that digitalization is key towards financial inclusion. And I can tell you that right now, one of the things we are looking at is how we are going to support fintechs, payment systems in particular, to ensure that they can accomplish their overall objectives. Because we have very, very good, very viable fintechs, which are unicorns all over the continent. And we must, as regulators, support them in their efforts to ensure that they meet their objectives. And we're going to be holding a summit very shortly. And the results of that summit will be made public. And those who, of course, there'll be limited space, but those who can come should come. And we believe that having all the different participants in the room and understanding the issues better will help us to jumpstart some of the issues we have with respect to financial inclusion and the exclusion of the less privileged, and ensure that we reach out as far and wide as possible. Because, as has been said earlier, a situation where the economy is growing and we are leaving others behind is certainly not an acceptable model.
Thank you, Governor. All right, we'll open the floor for questions.